All right. Welcome to Be the Market Expert. I want to kick it off with this. If anyone has been around Keller Williams for some time now, what you know is that Gary Keller doesn't jump on these pressers as often as he used to, and they're typically around our bigger events. So this Housing Wire article came out, and what's the importance of this? Well, the importance of this article, right, that reads Gary Keller, Why Broad Listing Exposure Still Matters in Real Estate, is that there's been a lot of conversations regarding private listings. All right. So a lot of these conversations around private listings are going through and they're touting them as a benefit. They're touting them as a benefit to the seller to not put the home on the MLS. And with this, it's interesting, right? So when we go through and we look at this, these are like six things that I think that we should be thinking about specifically from this article. Number one is that we need to be able to go through and explain what the seller's rights are versus seller's education. All right. Like we need to be able to go through here and educate them and fully go through and tell them what their rights are. Like they still have the right to choose. And what's happening right now is if we go a little bit deeper, if you guys are staring at this right now and you're like, Charles, what is this? Is that we have a company out there right now. It's called Compass. Compass is a very large brokerage. And one of the things that they're doing is they're pushing these private listings. And they're saying that, hey, private listings are actually advantageous to sellers to have limited access to their home and to essentially not put it on the MLS. They're saying, well, hey, if anyone wants to know what we're selling, 123 Main Street, they can specifically go to our company's website and go figure out all the listings that are not on the MLS. Well, again, I do think that there's probably times and places to not put the home on the MLS, especially at the seller's discretion. And yet we are limiting the eyes and we are limiting the buyer pool, and it does numerous things, right? It goes from the point to where it's probably dropping the dollars that you could potentially get for the seller, as well as the other side of these things is that there is going to be disenfranchised buyers that are going to be disproportionately affected because they did not have access to these homes. And so it opens up a lot of potential issues. And so, firstly, like our responsibility, guys, as real estate brokers in the state of Colorado is full disclosure, right? We're not going to persuade our clients to do one thing or the other. We are going to give them the risks, the benefits, and we're going to go through. Again, it's not a sales pitch, right? This is full disclosure. Are we clearly presenting the pros and the cons to these private off-market listings? Because here's a con that no one's really talking about, and it got upheld by a court, is that Compass went through and they were suing Zillow. Remember, most buyers start their home search online. And we know that the most eyes that is putting eyes on homes is Zillow. And why homes.com might dispute that, what we understand though is most of these are going through Zillow. So what has Zillow said? Zillow said, here's the thing. We got stockholders, shareholders to protect. We have a brand to protect. And here's the deal. You're more than welcome to not put anything on the MLS, which syndicates out to us. But here's the deal. If you withhold any listings and you do not put them onto the MLS so that we can actually put it out to the people to look at our websites, that if you do so happen to actually put it on the MLS later because you were unsuccessful in selling the home, we are not going to show that house. And guys, and they got their AI bots crawling websites right now to see, oh, there's 123 Main Street. Is 123 Main Street on the MLS? Nope. Well, flag it. And if it does go in the MLS, we will not push that anymore. And so, guys, these are the things that we got to make sure that our clients are fully well informed, right? So are we presenting the pros? Are we presenting the cons? Or are we framing exclusivity as a benefit without discussing the trade-offs? All right. So as we're going through, these are the conversations, right? And exposure and price, right? More exposure typically means more competition, right? And with more competition, that actually most of the time means that we're going to have stronger negotiating leverage for our sellers. Guys, here's the deal. I can almost guarantee as I'm looking at this call, and I think all of you guys have been licensed long enough now at this point, to where you're probably getting text messages from investors. Hey, do you have any off-market properties? If you ever engage any of these people, which I do so often, and I go through and I say, well, actually, I don't think it's in the best interest of my seller. And then they'll go off on their whole tangent on why it's actually a benefit because they're actually going to flip the property. And so if it's off the MLS and you give it to them and they flip the property, then there's no issues with funding down the road. And it's like, but I'm not concerned about the end user. I'm not concerned about the buyer after you. I'm concerned about my seller. I have a fiduciary responsibility to my seller to seek their price and terms and honestly get them the most amount of money in the least amount of time for the less hassle possible. Right. So as we're looking through this, like we want to make sure that we get as much exposure on these properties as we possibly can. All right. When we talk about like the long-term market impact on this, right? Today's seller is actually tomorrow's buyer. We know historically speaking that sellers do become buyers. And so if inventory is withheld, buyers are going to see less, right? And so if buyers are seeing less, it's going to hurt both sides over time because as sellers are selling their home, if they're not putting their home on the market and they're keeping exclusively somewhere else, and then a buyer, the sellers that they can actually become buyers for is actually doing the same thing, guys. We have this weirdness where there's no inventory that's actually being shared with anyone. So, guys, as we're going through, what the office stance is it's 100% our clients' decisions. Now, again, you guys are going to go to these tables where you are competing against one, two, three other agents. And there you might be competing against a brokerage where the brokerage says we have private exclusive listings. Well, guys, we have the ability to do that as well, Mr. and Mrs. Seller. And yet, may I educate you on what I actually think the pros of this are and what the cons of this are as well? And simply the decision is up to you. And I will execute however you want me to execute, guys. And so we do have private exclusive listing terminology and clauses that we can put into our exclusive rights. And yet it is not our decision. It is the seller's decision. And we have to make sure that they are educated on this, right? So it's written disclosures, right? And we need to make sure that we are trained on the trade-offs clearly. All right. And then again, guys, here's the thing. When we're talking about brand and trust, right? Strong markets are going to build on transparency. All right. Trust compounds over time. So are we building trust for just short-term advantages, right? And I truly think that's what this is. Like this company that is going through and doing this is making headlines to where the point to where Gary Keller was like, oh, I need to put out my thoughts on this, right? We have one of the greatest industry leaders ever in real estate. And when we're looking at this is what's coming out of here. So we're not going to dive through the article. Those are the major points, I think, as we think about this, that I want you guys to be educated on. This conversation is going to be coming up more and more and more. There's going to be lawsuits over this. There's going to be battles over this. And I don't want any of you to be caught off guard. All right. We have the ability to do it. There's a potential that if we do it, just like the other companies, that Zillow actually might not allow the home on the market if it does not sell off market. And typically what we understand, though, is that if it does sell off market, there's lesser eyes on it, which means there's lesser competition, which means that there's lesser negotiating power from our side to get you the most amount of money, Mr. and Mrs. Seller. All right. So I want to bring that to your guys' attention. You guys, like if you go through, you should be able to pull this up and be able to look at it if you guys wanted to. All right. One of my favorite conversations ever is around boomers. And when we look at this, right, boomer retirements could trigger record small business transfers. All right. So also my favorite topic, at least one of my favorite people is Cody Sanchez. And so if no one knows who Cody Sanchez is, Google her and listen to a podcast, follow her on social media. She's super smart. And one of the things that she does is she just talks about these small businesses and just being able to go through, can you buy small businesses, create small businesses, insert whatever here. Well, what we do know is the baby boomer generation owns most of the wealth in the United States. All right. So when we're talking about most of the wealth in the United States, a lot of this is going to be tied up into real estate, which is our business, as well as small businesses. And so there's this study that was just done that it says about 6 million US small businesses will face some transitions by 2035. Guys, and when we're talking about small businesses, I mean, think about some of these company trucks that you see, like HVAC company trucks, like electrical company trucks. I'm not talking about like the restaurant brick and mortars or anything like this. Like, think about some of these companies that you see that are just a staple, and you just think about them when you think about like Colorado small business. Guys, these are the ones that are going to be transferring hands. And so as we're going through and we're looking at this, right, it says this: the US stands on the brink of an unprecedented wave of small business ownership transitions as millions of baby boomers retire, creating both economic risk and a rare opportunity for wealth building across communities. And so this is why, guys, I want you, if you know anything else, go listen to some Cody Sanchez stuff, because these are the conversations that she's having. And some of these businesses, I mean, this could be like a mobile dog washing business, right? This could be the gutter cleaning businesses. And I want you guys all to think as entrepreneurs, right? Yes, real estate is a huge conduit for wealth building. And yet, why limit yourself there, right? When you can have unlimited earning potential through multi wealth building strategies. And so by 2035, right, they're saying 6 million facing this. And it says more than 1 million of these firms are viable candidates for sale, representing up to 5 trillion in enterprise value that could either fuel economic renewal or evaporate through business closures. And so what relationships are we getting in? It says these small businesses employ more than 60 million workers and generate 35% of business revenue. Guys, that's a lot of bodies, right? That is a lot of bodies that are employed right now. And so we need to be looking at this. So those rural areas face disproportionate risk from the coming wave of transitions. Yeah, because if we look at this, like how many people are moving into these rural areas, right? Like it's a smaller population. So it could get a little bit weirder out there, outside of like what we look like in the greater Denver metro area. It says in as we're looking at this, it says in states such as Maine, Montana, Vermont, and Wyoming, the value of small businesses at risk represent as much as 3.2 of the economic output. So it's not huge, right? This isn't like giant numbers, 3.2%. And yet, guys, Wyoming's on our border, right? So it's like, okay, cool. If we're talking about some of these businesses, if I'm an entrepreneur and I might be interested in this, and yes, like these are also families that are going to be impacted about buying and selling real estate down the road. And yet they might have something that attaches to real estate that actually might be really nice for my business that I can marry those two together. It says under the current patterns, only about 28% of potential business value transfers would accrue to women and Black and Latino individuals combined. All right, so this goes back even to the last conversation. This is disproportionate. And yet, as we're looking at this, as we're going through and having these conversations with these business owners, how can we be the conduit to potentially get this information out to the masses, to the people? And so as we're going through and we're looking, it says closing the participation gaps could unlock up to $3 trillion in new household wealth, guys. And that is huge, right? As we are looking to be the real estate economist of choice, as we are looking to be that conduit for information, and we have people in our ecosystems that are like, you know what? I want to be a business owner. I've never had the opportunity. And we're able to connect some of these people together, guys. Like, that's big, right? And I want that for all of us in this ecosystem. So it says this moment is not merely a generational milestone, it's a structural test on the nation's capacity to preserve local employment. And so when we go through, it says the barriers to transition, it says despite the economic value embedded in many small business closures, rather than continually remains the dominant option today. In 2022, an estimate of 510,000 small and medium-sized businesses exited the market, with 92% occurring through closure. Guys, here's the deal. This is what's cool. I recommend everyone go look at Cody Sanchez. And she's going to talk about different strategies. And some of those strategies are really going through and see if they do an owner carry for 5-10 years, right? Where you buy the business from them, they're floating the money, you're paying them some kind of whatever to go get it. You now have acquired a business that you are now in it, and then you go and you refinance the business later down the road at a agreed upon time and agreed upon dollar, as you have increased the value. Because this is what's neat about these businesses as well. When we're talking about the baby boomer generation being business owners, most of them, they're not on TikTok, they're not doing Instagram reels, they're not doing YouTube shorts, they're not doing social media at a very high level. How can you as a business owner inside real estate, use your real estate skills and the marketing that you understand how to do and be able to push this business up to create more revenue and to be able to purchase this business, right? And do it through an owner carry. It's also talking about senior housing wealth, retirement savings. It says in addition to potential transfers of business ownership, a monumental share of housing wealth also stands to change hands. All right, they're saying home equity among U.S. homeowners ages 62 and older rose to a record of $14.6 trillion. Guys, and here's the thing. All right, so if I wasn't exciting you about Cody Sanchez, this should excite you because you all have real estate licenses on this call. And so when we're looking at this, this is what we know. We know one of a couple different things is going to happen. Either the kid, I'm going to say the kid has a house right now and they're going to inherit mom and dad's house and they're going to sell it. That's one scenario. They could move into mom and dad's house and sell their house. They could put one of those houses up for rent. They could sell both houses and go move into a new house. Guys, and here's the deal. We're talking 2035. You have time, right? As we're going through and we're building relationships with all these people in our ecosystem, just know that by 2035, good things for at least your business are going to be happening. And so as we're going through this, and we know this is a long game, and while 2035 seems so far in the future, yet what relationships are we building? Maybe we're auditing our current friends list. And we're like, well, you know what? These people probably are not in the market to buy a house anytime soon. Maybe they can't afford a house. Maybe their job doesn't really allow them the financial ability to go out and purchase, but yet they have parents. And yet, as we're building those relationships with them as their real estate economists of choice, when it comes down to helping mom and dad make some decisions or them making some decisions about mom and dad's real estate holdings, they think of us. And guys, this is huge. All right. So as we're going through, it says an estimated 2% increase in home values added about 295.4 billion in senior housing during the quarter. Right. So as we're looking at this, guys, there is a lot of money that is transferring hands, and we are going to see right sizing, downsizing, and everything in between when it comes to real estate. And that's where we come in. As we're talking about real estate and looking at housing inventory, it says why the housing inventory map is so startling. All right. So as we look at this, it says available inventory of homes for sale has been climbing for 4 years. All right. Welcome to 2026. We're talking about 2022. What do we know? 2019, normal housing market. 2020, global pandemic. 2021, money was free. Interest rates were super low. 2022, this hockey stick, inverted hockey stick that it just launched. And it wasn't the fact that interest rates were so astronomically high. It was the fact the velocity and the speed to which they went up over a short period of time. That's what shocked the system for most consumers. So the later part of 2022, 23, 24, 25, what happened? Interest rates stayed elevated. So as we're going through, we have these elevated interest rates. Well, some things happen with that as we're looking through. And we used to talk about the golden handcuffs, about how no one was going to be buying and selling real estate because they were locked into 3% interest rates. And yet we're seeing buyers move now. We're seeing sellers move now. We're seeing real estate buy and sell and ebb and flow out. And again, we're in the seasonal market, guys. We live in Colorado, so we are very seasonal. And yet we also understand that real estate's seasonal. I would say that as we look at the seasonality of real estate, we've also seen a big paradigm shift in our people, where we've heard more so and more so, I'm waiting for my forever home. We're hearing that more and more. And yet I don't necessarily agree that they're meaning that they want to buy this house and die in this home. What I think more so is that they are looking for a home that checks multiple boxes, because the cost of money is so elevated with our price point, specifically in Colorado, that they don't want to have to make a move 2 years down the road, 5 years down the road, 10 years down the road. They want to make sure that multiple check boxes are hitting. So if they're thinking about starting a family, if they are going through and they are running a business where they work from home, or maybe it's a home business, They have hobbies, insert whatever here. They are looking for those check boxes. And think about the buyers that are happening right now. We know that the average first time home buyer is in their 40s, which is nutty to think about, right? As we were to go through over the last 10 years, we saw this go from the 30s to their 40s. And yet, what we also know is their down payment. Now, their down payment hasn't necessarily changed over the years. We just know the price point is higher than it has ever been. And the Denver metro area being $600,000, that means your first time home buyer who is 40 years old is having to bring $60,000 down for a first time home down payment. And guys, that's a significant amount of money. I mean, no raise of hands. Don't put it in the chat, but just think of yourself like, do I currently have $60,000 to go drop on a house right now? Right? Like that's a simple question to kind of go through and to have the conversations. But let's look at the map. So here's your map. And as we're looking at it, here's your inventory change from 2019 to 2026. All right, your geography lesson. We are this square right here. All right. So if anyone didn't know, Colorado's a square. This is who we are. So we're at 20%, 27% inventory change positive from 2019, pre-pandemic normal market, to today. 27% more homes than the global pandemic put into our hands. Now, we're not the highest, and we're absolutely not the lowest. Like when we go over here and look at Massachusetts at negative 66%. So what would this look like? Well, we saw this demographic change, guys, because remember, what we were seeing 2020 is people were pretty much moving wherever they wanted to move because we had digital nomads roaming the United States and money was free and they were just moving wherever they wanted. Well, a lot of people were like, I'm going to move in here, right? They were like, let's go into this area right here, maybe down into Florida. I get to live on the beach, saltwater, tan, cheap, right? Because it's fairly inexpensive when you move down here, especially when you consider Colorado. So we saw this mass influx of actually people moving to Texas. We saw mass influx of people moving into these areas right here into this panhandle. Well, what's interesting is all these people moving into this area. We also saw builders building. We saw a lot of stuff happening, and now they got more inventory than they did pre-pandemic. Same thing with Colorado. We saw a lot of people moving into Colorado as well. Well, what happened? We also saw this shift as money was rising, where this is where everyone was moving to. And with that, we saw after the interest rates rising, the digital nomads were disappearing. People were getting called back to work, all this stuff. Well, these people were having to sell their homes and move. And these people were already over here. And now there's no inventory. So we see lesser inventory in these areas. We saw this shift from everyone moving over here to these panhandle states, to everyone moving to the northeastern part of the United States. And it shows. Well, what does this mean? Well, let's just on Colorado, because who cares what happened, what it means on the East Coast. But in Colorado, what that means is there's more opportunity for your buyers. All right. So as we're going through, we're seeing interest rates come down a little bit. We also know that we are seeing seller concessions almost blanket offered in the beginning of the negotiation process. There is so much opportunity for your buyers as we're going through and having these conversations where we can buy down interest rates. Mr. and Mrs. Buyer, I understand that we're looking for more of a forever home. What are your check boxes, your non-negotiables that I can go out and look for you, knowing that there's more inventory, which means that the people that have their home on the market today are more inclined to negotiate to get their home sold. Because while it isn't snowing, it's raining or something weird right now in March, that as we go through and we look at this, the people that are listing their homes right now, they're motivated. We have motivated sellers listing their homes right now. And we know that there's mechanisms that we can pull these different levers to help people have a more affordable home buying journey as we're looking through. And these sellers are willing to come to the table and negotiate to get their houses sold. Guys, this is good news. More inventory right now as a buyer's agent is exciting. And so we should be having as many conversations as we possibly can with our people because they're tired of sitting on the fence. YouTube, TikTok, Fox News, CNN, insert whatever here has been lying to them for so many years about the Airbnb bust, the silver tsunami, the housing crash, the insert whatever here. They got fatigue. Their butts are sore from sitting on the fence. They are ready to buy. And that's where we need to be the real estate economist of choice. So as we're looking through, let's look at what Logan Motoshami says. All right. So this was Friday's data. We're looking at this. This is a rear view facing. He says, will war with Iran send mortgage rates higher or lower? My guess is probably higher. And the only reason why we don't know is this. If it starts getting weird, the Fed's going to lower rates to get more spending. If things don't get weird and people are still spending money, they're not going to do anything, but the rates could go up, right? Like that's what we are. It's a weird teeter totter of stuff. It says rates ended last week under 6%. Cool. We like that. So the Iran conflict, if anyone has been living under a rock, I've been off social media for a couple weeks now, but I still see the news and this is a lot of it right now. So we are in a conflict with the Middle East again. And as we're looking at this, guys, when we start talking about anything that's going to impact us, obviously war impacts us, cost of oil is going to impact us, stock markets, like all this is going to impact us, both as people and as business owners, right? Like personally and business, this is going to affect you in some way. We're not going to talk about the 10-year yield. We're not going to talk about mortgage spreads. But let's look at weekly pending sales, guys. Here we are. Here's 2026. We're looking at against 2024 and 2025 data. There's more pending sales year over year and 2 years back than there was. This is a good sign. What does this tell us? 6% interest rates is not scaring anybody right now. Guys, let's not be looking at our own checkbooks and say, oh, interest rates are still high. We live in Colorado at $600,000. Like that's expensive. People still need a place to live. So there's more pending sales. And again, this is nationwide data. Mortgage purchase application data. All right, so let's look at this. And so if you were to look at this, like this actually you would say like, oh, this is a little concerning to me, Charles. Like if you were to just kind of look at it as a whole, I still don't think this is bad. So what are we looking at? Here's 2025. This is your red. So you got 2025 and this is your purchase application data. Purchase application data is your consumers reaching out to lenders, figuring out what they qualify for. And so my warning to everyone is that if you're not reaching out to your database and you don't know who's reaching out to lenders, hopefully those lenders that they're reaching out to know you, or else they're going to refer to their real estate agent of choice. And so as we're going through and we're looking at this, yes, we can actually see a decline, but yet what's important to me is that there's still more year over year. And what's interesting is if you look at 2025, while we're coming like this drastic dip, that just told you how many people were excited to get off the sidelines to start. And what's also interesting is we know that we're in a 90-day business. I would say these people right here, these January 28th people, they haven't bought their house yet. All they've done is reach out to an agent or a mortgage loan officer to figure out what they qualify for. And they're just scrolling Zillow right now looking for houses. So you still have opportunity. Now, if we were to keep going here, guys, look, this just looks like seasonality to me. And what do we know right here? Florida, snowy, eating iguana tacos, right? So, but as we go through and we look at this, it's just dropping down, but it's still higher than what it was last year. So we're looking at this, and this is still positive, guys. There's still more people 2026 raising their hands, talking to lenders to figure out what they qualify for than there were this time last year. Even with this dip is not concerning. Now, guys, we want to make sure that we're reaching out to our people, being that real estate economist of choice. And what we also understand is that some of this is probably refinances as well. Refinances as well, because there's people, guys, right now that have interest rates at 8%. And while that might hurt some of your stomachs, it hurts mine, right? As we're going through again, there's still people buying at 8% interest rates. And so when we're looking at 6%, we're like, who's buying at 6%? Those people that were locked in at 8 would have loved to be in at 6%. And we understand that there's more mechanisms where you can take 6% and drop it into the fives or lower, depending on concessions and other incentives. Guys, do not sleep on this. This is good news. You guys should all be excited that we're still above 2025 data. Single family inventory. So this is national again, but if we look at this, we're still above 21 through 25. All right. We are seeing more inventory come online. Golden handcuffs, right? What we are saying is the sellers are saying, like, here's the thing, and maybe I do have 3% interest rates, but life. We are in a business where life happens, and life is what is making people make decisions to buy, sell, or invest in real estate. Now I get it. Some of us were around in 2021. Some of you guys were home buyers in 2021. But as we're going through and we're looking at this, 2021 was an anomaly. We literally saw people moving across the street for a different view. Like it was odd. And we saw it because the cost of money was so cheap that they were like, I want a new view. I love my neighborhood. My neighbors are cool. I just want to be on this side of the road. And yet, what we know historically is people don't move that way. They're having kids, kids are going off to school, people are getting married, people are getting divorced, people are being transferred, they're getting promotions, they're doing life. And this is what makes people buy and sell real estate. So as we're looking at this and we're seeing this inventory come online, we're also seeing inventory come offline. We're also seeing mortgage purchase application data going up, which means people are ready. People are tired of sitting on the fences and we need to be in relationship with them. So here's your new listing data, right? We're right in the mix, right? As we go through here, we're right in the mix. Nothing really odd is in this. So as we're going through, here we are. Your price cuts. So if we look at the price cuts, it actually went up a little bit, right? We were looking at 31%. Now we're at 32. But what we know is this. Historically speaking, 1/3 of all homes take a price cut. 1/3 of all homes do take a price cut. So as we're looking at this, and this is what's weird, guys, here's 2022. Remember, I said interest rates were low, interest rates were low, and then they skyrocketed. Well, these people were under contract on a new home that they were buying, and they needed to sell their home. So they were taking price cuts. We saw that this is an anomaly. This skyrocketed. This is pretty much what interest rates did. But if we look at this, guys, like here we are. We're still lower than 2025. We're higher than 24 and 23. And yet this is good. What this also is when we're looking at motivated sellers this early in the process, which we would assume that they are. It's winter. If people have their home listed right now, it's because they are motivated to sell their house, guys. And this is what I'm saying. If you have buyers, get them off the sideline. Let's start looking at some properties. Here's your jobless claims, guys. And here's the deal. As we're looking at this thing, jobless claims are definitely impact our businesses hugely because these are one of the big red flag indicators for recessions. And yet, as we look at this is nothing to be concerned about. And honestly, I've told you guys this numerous times. As we look at this, a recession is not bad for your business. A recession is actually really, really good for all of your businesses. Yet, here's the thing: we're Americans. We're not cheering for other Americans to lose their jobs because that would be anti-American. And who wants to create that kind of stress on anybody? But what we do know is this: if people start losing their jobs, what the Fed does is they start lowering rates. It's the money that they loan to banks. And while we think of real estate, it's really to impact and just stimulate spending. And we have to think that small businesses and business owners, they go out, they get the loans from the banks. They're able to employ more people to sell more widgets. And that's what stimulates the economy. Just the byproduct for us is that the affluent buyer out there is also going to go buy a house because interest rates just dropped. They still have their job and now they're reaching out to you to go show them a home. So again, we don't cheer for this data whatsoever, but I want you guys to realize that when you start seeing this stuff in the news, job loss claims does not hurt you guys. It actually helps you guys. It says it might get hectic this week, right? Remember, this is Friday. It might get hectic this week, but also remember that mortgage spreads being better has compressed volatility with rates. Yes. However, we always watch how the bond market reacts to the jobs data, which has been key for him. So as we look at this, I don't know if they're necessarily doing anything, but let's take a look. So here's 3 months worth of data just because I like to see how far we've come in a quarter. All right. So this is December 3rd all the way to yesterday. This is not today. This is the 2nd because the data just doesn't happen. You can kind of see like the conforming loans spiked a little bit while FHA dropped. And that's what we're saying, guys. This is so unpredictable. This is why we understand that you cannot time the market. There is no timing the market. But as we look at this data, guys, and we look and like, here's the peak, right? 625 and 614. And we were to go over here, well, FHA, here's your valley. Here's your valley for conforming, guys, and they change, right? They move so much. And yet, while we understand that there's things happening in Iran, for the most part, there's no rhyme or reason to how these things pop up and down outside of a random tweet here, a random press conference there. And it doesn't matter who it is, it's anyone of power says something and these things start to move. So as we're having these conversations with our buyers, Mr. and Mrs. Buyer, we understand that you are looking to purchase a home this year. What are we waiting for to actually dip our toe in the market? And there's, well, I'm waiting for rates to drop. And you said, awesome. What do rates need to drop down to make it more comfortable for you to go out and purchase a home? And then go through. And when we're looking at this, and we know that we have these different mechanisms with concessions and buy downs and everything else that we're able to use to drop down these interest rates, what we also know is that these sellers that are on the market right now are motivated. And so, what other things can we do to drop these home prices? But let's just play out their scenario. Mr. and Mrs. Homebuyer, how many other people do you think that are on the sideline currently right now that are waiting for interest rates to drop to that number? And what happens if all of you come online at the same time? So a lot of the times they have this number in their head because they're looking for a monthly payment. And if we're able to get them in that monthly payment by partnering them with our lender partners, guys, this is how you become the real estate economist of choice, to be able to help people buy and sell real estate to where they are looking for you for guidance. But let's look at it over a month. Here's your month, guys, and it's still going down, right? This is the end of January to March right now. I guess this would be the beginning of February, I guess is really what this is. Yeah. So guys, as we're looking at this, it's still going down, but we ebb and flow up and down a little bit on this thing. And again, there's no rhyme or reason to how we can time this market. And then if you really want to look at where we've come, here's 1 year. Guys, and when we see stuff like this, like, we don't like this. These are big. This is what gives people and scares people a little bit, right? Remember, most sellers become buyers. So if I put my home on the market, I know that homes are sitting, 60, 90 days at this point, unless we price it competitively in an area where people actually want to live. And if I price my home and I put my home on the market, and let's say that I put my home on the market down here, right? Oh, yeah, this is where I'm going to price my home. And then I get an offer on my home here. I find the home that I want to buy here. I've just jumped in my interest rate because now I'm locking in somewhere over here, or maybe I'm locking in this area. This is what scares sellers. We live in the United States. We want to see it kind of flatten out. We're okay with it going down a little bit. We don't want to see this roller coaster with these peaks and these valleys, because that gives your buyers and sellers uncertainty. Buyers start to want to time the market. Sellers are scared because they know homes are sitting longer and they don't want to be locked into an interest rate that actually dwarfs their purchase power, right? Like, that's what they're worried about. So as we're going through, guys, inventory is looking good. Interest rates are coming down. Yes, we have the conflict in Iran right now, which we don't know what's going to happen. And because we don't know what's going to happen, yes, it's going to impact rates. There's going to be some volatility happening all the way around, but yet we still know people are living through life. People's leases are coming up, right? People are outgrowing their homes because they're expanding their families. People are getting promotions. People are getting transferred. Life still happens. And our only job is to get into a relationship with as many people as possible, to be the real estate economist of choice, to help them with the largest financial decision that most Americans make today. And things are looking up for 2026.